Welcome back. And Vikram Dhawan is Head Commodities and Fund Manager at Nippon India Mutual Fund. Vikram, hi, thank you so much for joining in. The headline clearly comes in from silver. Would want to really understand on how is silver ETF trading at such huge premium when the silver prices are where they are.
Thank you, Manisha, for inviting me on your show. There is a massive global reset which is happening in the asset allocation globally. We have been seeing central banks diversifying against the US dollar for quite some time now. And now we are seeing the same kind of asset allocation reset happening in the individual, private, and institutional portfolios. And silver, with its strong fundamentals, because of the green tech demand, is also benefiting from this, a big reset in asset allocation. Now, when you talk about premium, it's very important to understand what is happening in the market today. Today, there is a 4 to 5% difference in price between New York and London. There are, whether you go to Shanghai, Dubai, or Singapore, any of the trading hubs, there is, a shortage of material. There are premiums available. So I think when you talk about premium, if you're comparing the price with the LBMA benchmark, then unfortunately the LBMA benchmark is broken. It is not something which should be used as, as a benchmark for for valuing, because none of the material is being traded at that price. That remains a spot indication. The rest of the world is trading in variation of premiums above it. So I think if you talk about these silver ETFs in India, see, we are a very small market. We are a very small part of the entire ecosystem. Silver ETFs, as we have discussed in your show earlier, still today 90-95% of the consumption of silver occurs in physical form. So effectively, the ETFs, silver ETFs, are price takers, not givers. We are just a messenger. The domestic market is at a premium, 5%, 10%. It is fluctuating, and the silver ETFs are reflection of that. So we are the messenger of the physical market of India.
Vikram, I get that, but what happened yesterday was way out of line, would you say? Because in the international markets as well, there are silver ETFs and there are gold ETFs, and they were trading at a 1 to 2 or 3% max premium. In the Indian market, silver premium for ETFs went as high as 5, 10, 12% at one point in time for a couple of those ETFs. How would you read that? And would you say that there needs to be perhaps some kind of a circuit that you need to work on in sense of underlying commodity and the kind of premium that the ETFs can go up to?
Not really, Manisha, because when you say 10-12% premium over which price? Again, I said the London LBMA benchmark is broken. Nobody is buying and selling material at that price. It remains a theoretical benchmark. We can humor ourselves by taking it as a benchmark, but the fact remains, there's no material available at that price across the world. So effectively, yesterday, whatever premiums you were seeing in silver ETF were actually equivalent to, if not less than, the physical market. The Indian physical market is at a premium. And just to reiterate, we're not in isolation. The whole world is trading because at premium because of the culmination of many years of deficit that we have seen in silver. So I think it's very important for the investors to understand that if you're calculating premium over the LBMA mark, then obviously it is not something which is the correct picture.
All right. So Vikram, are you telling me that this was fair market that we saw yesterday? A yes or a no?
Absolutely, because as long as there is no dislocation between the ETF prices and the physical market in India, there is no problem. Because our mandate is to shadow the physical prices in India. And the fact that the arbitraging wasn't happening is a clear indication that there was no arbitrage available between physical market and ETF market. Just imagine, Manisha, if the ETFs were available at a hefty premium or a discount at the physical market, there is enough money and brains in this country to arbitrage and take profit out of it.
Agree. And that is silver on your screen, back yet again 2% higher. So $50 is back on our screen. This continues to be very, very volatile, Vikram. If we had to look at this current year of the 3 quarters in calendar year that we have seen, how much inflows would you see gold seeing? And would you say silver is outperforming, not just in price sense, but in sense of inflows as well?
So Manisha, there was various studies which were done as recent as last year, middle of last year, where it was clear that the managed money, global managed money, was either underweight on precious metals or had no holding. So from, as I mentioned about the great reset in the portfolio allocation, so from nothing, we are moving to some sort of an allocation. But again, it is very difficult. What is the target the private investor institutions have? Is it 5%, 10%? We don't know. But as long as this reset continues, we can all humor ourselves with macros and technicals and analysis. But the thing is, till the time this reset doesn't conclude, you will see a similar kind of market continuing.
Interesting.
Okay, all right. Thank you, Manisha, and thank you, Vikram, for taking us to this conversation, because it was an interesting phenomenon that took place yesterday. Silver ETFs trading at a premium to the commodity price that we see in the country. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll talk about more stocks and specific news action that we are seeing. Stay tuned for that.